morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Vinny Motiwala. Good morning, Vinny.
Good morning to you as well, Harsh.
Good having you around
Back here.
for Market Cafe again. So welcome back. But Vinny, talk to us. So as a backdrop, let me give you a quick rundown on what we cater to in this show. We start off with global cues and then we move to both global geopolitical news as well as domestic news, and then we move to stock specific news. So what I'm going to do is, Vinny, talk to us about how global markets are looking. The steepest fall in trade in 2023. So talk to us about what's happening.
Absolutely, and let's not forget India markets are also subdued in trade. And now we're seeing weak cues coming in from the US markets. Now, US markets actually closed out the worst day since mid of December. Dow ended with cuts of almost 700 points, especially on the worries of higher peak rates that could be seen coming in as well. S&P 500 and Nasdaq, both these also saw their third session in a row of closing lower and closing in the red as well. Dow Jones also obviously wiped out its gains that it saw coming in 2023. Like you can see on your screens, Dow Jones was down 2% in trade. Now, obviously, investors interpreted a rebound in the US business activity in February to mean interest rates will actually lead to stay higher for a longer time to control the inflation. In terms of the yields, also the US yields on the 2-year Treasury yields note advanced to 4.7%. Also, let's not forget in terms of we had commentary coming in from Walmart and Walmart Inc. as well as Home Depot as well. And on the back of that, those two shares were moving a bit in trade. Now, Walmart in terms of its commentary said ended up higher by around 0.6%, mainly as the retail giant reported its fourth quarter earnings and offered its forward guidance as well. The company beat estimates in terms of earnings of sales, but also offered a guidance on the first quarter and the full fiscal year of FY24 that fell short of the expectations of the street as well. Home Depot Inc. actually fell 7% in trade on the back of its numbers. In terms of what they were highlighting, while posting a beat in terms of the profit during the quarter, the sales missed the expectations, and that was a reason, as well as a downbeat forward guidance is something that led to the fall in Home Depot's numbers as well. So yes, weak set of numbers that we've seen coming in, whether you look at it from guidance, whether you look at it from Walmart or in terms of Home Depot as well. So keep an eye out on that. When you look at the European markets, how they closed in trade, whether you look at the DAX, FTSE, CSE, all of them closed in the red as well. And as of now, SGX Nifty is indicating a bit of a muted to a red start. We could stay coming in for the Indian markets as well, Harsh.
Well, yes, absolutely. Global cues not supporting the Indian market, at least that's what it seems on the basis of where the SGX is currently at. But quickly, let's look at where oil is positioned. Currently, oil is Brent is just below that $83 a barrel mark, a percentage or so of a fall, and that's largely, of course, on the back of recessionary concerns. So really, no change with what Vinny really summed up in terms of where US markets are is what is driving oil slightly lower. But mind you, there's one spanner in the works, if I can call it, for oil falling further, and that is the China reopening. Really, nobody knows what's going to happen on that front, and as it unfolds, it will impact oil prices. Also, Russia has cut crude production by 500,000 barrels a day. So that's the other piece that will be the moving part to track going forward, and that, of course, starts from 1st of March. So coming next week, that will be the other piece to track. So a couple of those moving pieces, but at the moment, oil looking slightly on the lower side. Brent below that $83 a barrel, WTI at $76 a barrel. Definitely a positive where India is concerned. But I'll throw it back to Vinny. Vinny, talk to us about what are the events to watch out for today.
Absolutely. Let's start the day with some of the global events. So obviously they'll be starting at the second half of the day when they're global events. Eurozone CPI data will be coming out. While on the domestic front, obviously we have the RBI MPC meeting minutes as well. And even the Federal Reserve will be coming out with their minutes of the meeting, which went out in the month of February. Other than that, on the domestic front, in terms of dividend eligibility, it's the last day to buy Kirloskar Oil Engines, Metropolis Healthcare, Supradeep Engineering if you want to be applicable for the dividend. Other than that, in other events, you'll be watching out for the ECB's Governing Council meet that will be there, as well as G20 finance and central bank deputies will be meeting today. Some more discussion points will be happening on that front as well, Harsh.
Absolutely, Vinny. And let's go straight to geopolitical news. Of course, the big address yesterday was by Russian President Vladimir Putin. Just days ahead of the anniversary of the Russia-Ukraine war, Putin blamed the West for fueling the conflict in the region. He said the West was diverting the attention of the world by creating conflict and that allies poured in trillions of dollars to fund the Ukrainian forces. Putin also said that the West was trying to globalize a local conflict and said his country's military was too powerful to be engaged in a direct conflict. Let's go straight to my colleague Shinjai Chaudhary, who filed this report earlier yesterday.
Yesterday, President Joe Biden of the United States spoke about the Ukraine war in Kiev at that. Today, it was the turn of Vladimir Putin, the Russian president, to speak out. And he has blamed the West for the war. He has said that Russia didn't want the war. It was something that the West has forced upon the Russians. And he has said that the Americans and the West have been arming the Ukrainians for a long period of time. As a result, Russia had no other choice but to get into the war, and it was forced to do it to stop the neo-Nazi regime in the Ukraine. Also, it has said that the West was training Ukrainian soldiers even before Russia invaded Ukraine, and also that in this while the Russians know that the Americans and others have given $150 million worth of weaponry to the Ukrainians. But there has been no talk about when the war can stop. There has been no statement about how the war can come to an end. Already, hundreds and thousands of people have been killed or wounded in the fighting, including civilians. The Russians, because they were aggressors, have really suffered more casualties. But at this point, it is very clear that the war will probably go on.
And keeping it with that, after Putin's speech on the ongoing Russia's crisis with Ukraine, ED now spoke to Suresh Goyal, former ambassador of India, to get his perspective. Let's go across and listen in.
You know, we all tend to believe that the people who lead us, whether it is in India or the USA or Russian Federation, wherever, we elect them and we think they're gods. We think they know better than all of us, really. The problem is that they're just human beings like us. They're also subjective. They're also basically emotional, and they also get upset, they get angry, they're happy and everything. They're just like us. The problem in the case of Ukraine, Russia and the USA is the different aspirations have come in the way of finding a reasonable settlement. It happened 1 year ago. If they had to find a settlement, that settlement could have been found without any problem at all if we were all rational people. But we are not, and we all have our own challenges. And therefore, in this particular case, I think what actually might have appeared to be a simple problem has become gradually a European problem. And despite what the Minister Jaishankar might say, it is soon becoming a universal problem because the economy is so interlinked.
Right, and we'll go stock specific. Vinny did speak about Walmart, and Walmart topped holiday quarter earnings expectations as the discounter said it drew budget conscious shoppers to its stores. The big box retailer gave a weaker than expected outlook for the year ahead. The company said it expects some store sales for Walmart US to rise between 2% and 2.5%, excluding fuel, in the fiscal year ahead. Walmart is, of course, the largest grocer in the US by revenue.
Let's keep it with more earnings, and Coinbase reported user numbers that actually fell short of the analyst estimates, even as the fourth quarter earnings and revenue beat the projections. Revenue plunged nearly 75% from a year earlier as the so-called crypto winter continued to drag on the prices of cryptocurrencies. Coinbase's user base continues to shrink, and the company said its monthly transacting users also declined during the quarter four.
Well, yes, and HSBC reported fourth quarter earnings as well. Of course, calendar year 22 that beat analyst expectations. The bank's Reported profit before tax for the 3 months ended December was $5.2 billion, 108% higher than the $2.5 billion it clocked a year ago. HSBC said its fourth quarter results reflect a strong reported revenue growth and lower reported operating expenses. The bank cut its annual bonus pool by 4% to $3.4 billion in 2022.
Moving on to some news coming in on Tesla. Tesla has actually paused plans to produce entire batteries in Brandenburg, Germany, and will instead carry out some production steps in the United States, where tax incentives are more favorable. The US car maker had originally planned to produce the full battery at a site in Germany with a peak capacity of over 50 gigawatts per hour per year.
Well, and Microsoft Corp has struck a 10-year deal to bring Call of Duty and other Activision games to Nvidia Corp's gaming platform if the Xbox maker is allowed to complete its much-contested $69 billion acquisition of Activision. Regulators and competitors like Sony have come out hard against the proposed Microsoft-Activision tie-up. The move may allay concerns by ensuring more ways for consumers to get games controlled by Microsoft.
Obviously, and we have a lot of news coming in around this UPI front, a tie-up of India and Singapore in terms of the payment schemes as well. But India has been leading this new age digital payment through UPI, obviously, Unified Payments Interface, and now Payments Network has gone global after being integrated with Singapore's PayNow. Let's go across and actually understand what this actually means. How does this actually work out as well?
India has been leading the new age of digital payments through UPI, or what we call the Unified Payments Interface. And now the payment network has gone global after being integrated with Singapore's PayNow network, which will allow for faster remittances between the two countries, and that too at a more competitive rate than ever before. So today we're going to explain what this really means for UPI, its users, and yes, the global payment space as well. So Paytm, Bharat Pay, Phone Pay or Google Pay. If you've used any of these apps, then the underlying system that you've used is UPI. But you probably knew that already. Just to give you some perspective on this, the Unified Payments Interface, UPI, is India's mobile-based fast payment system. It facilitates customers to make round-the-clock payments instantly. It uses a virtual payment address created by the customer. It's effective, it's convenient, and it's convenient and effective because it eliminates the risk of sharing bank account details. The remitter doesn't have to share bank account details. UPI supports both person-to-person as well as person-to-merchant payments, and it also enables a user to send and receive money. Now it seems PayNow, which is a fast payment system that has been developed in Singapore, now it enables peer-to-peer fund transfer service just like UPI. Again, all the remitter and the receiver need to share is their virtual payment address. So how are these two payment systems actually linked? Well, the project to link both the fast payment systems has been initiated in September 2021. It's been done to facilitate faster, more efficient, more transparent cross-border transactions that relate to trade and travel and remittances between the two countries. So cross-border retail payments, they're generally less transparent and more expensive than domestic transactions. So now the UPI PayNow linkage becomes a significant milestone in that development of cross-border payments, at least between India and Singapore for now. What are the real benefits of this linkage? The UPI PayNow linkage is going to actually enable users of each of the two fast payment systems to make instant, low-cost fund transfers on a reciprocal basis without the need to get on board another payment system. So imagine sending money to a friend or relative in Singapore with your most preferred payment app. No need to get on PayPal, or Swift or any other payment system for that matter. And that's what makes it so simple and so beneficial.
Welcome Welcome back, and you're watching Market Cafe on ET. Now, as of now, seems like SGX Nifty has seen a bit of a decline coming in further as well, down 0.4% in trade. But let's look at what is actually going to be coming up on the markets during the day. We have an interesting lineup for you all, and we're going to be starting at 9:20 with Vetri Subramaniam, Chief Investor Officer, UTI AMCs, to talk about the markets. In terms of value unlocking, is that in play coming in for NMDC at 9:55 a.m. We have Sumit Deb, CMD at NMDC, joining in with us. And to talk about their growth roadmap ahead, we have Anuj Khaturiya, President at JK Tyre and Industries, joining in with us to talk about that at 10:20 a.m.
Right, power pack lineup there for you in the market going forward. But we'll just quickly go in for the news for the hearing impaired, after which we'll go to domestic news. Stay tuned.
अध्यक्ष ने की पीएम मोदी से मुलाकात, कहा कोविड समेत तमाम रुकावटों के बावजूद चालू वित्त वर्ष में अपेक्षित 7% वृद्धि के साथ सबसे तेजी से बढ़ती प्रमुख अर्थव्यवस्था बना हुआ है भारत। वित्त मंत्री से भी हुई साझेदारी, रणनीति पर चर्चा। मेघालय और नागालैंड में नेताओं का धुआंधार प्रचार, बीजेपी के स्टार प्रचारकों समेत कांग्रेस नेता राहुल गांधी और टीएमसी के नेता आज करेंगे अपनी पार्टी के लिए प्रचार। लंबे इंतजार के बाद आज दिल्ली को मिल सकता है नया महापौर, उप महापौर और स्थायी समिति के भी होंगे चुनाव। कर्नाटक में आज से शुरू होगी G20 के वित्त उप मंत्रियों और केंद्रीय बैंकों के उप प्रमुखों की बैठक। आर्थिक क्षेत्र में 21वीं शताब्दी की वैश्विक चुनौतियों से संबंधित मुद्दों पर होगी चर्चा। आज खजुराहो में आयोजित होगी G20 संस्कृति कार्य समूह की पहली बैठक। कल्चर फॉर लाइफ पर दिया जाएगा जोर। खजुराहो के विश्व धरोहर स्थलों का भी दौरा करेंगे G20 के प्रतिनिधि। चुनाव आयोग के फैसले के खिलाफ उद्धव गुट की याचिका पर सुप्रीम कोर्ट में सुनवाई आज। शिंदे गुट को शिवसेना का नाम और निशान देने के आदेश को दी गई है चुनौती। अंतर्राष्ट्रीय खबरों में रूस के राष्ट्रपति ने यूक्रेन युद्ध के लिए पश्चिमी देशों को ठहराया दोषी, तो अमेरिकी राष्ट्रपति ने यूक्रेन को सहायता जारी रखने का किया ऐलान। और आइए अब जान लेते हैं सभी खबरों को विस्तार के साथ। एशिया विकास बैंक के अध्यक्ष मसात्सु असाकावा ने प्रधानमंत्री नरेंद्र मोदी से मुलाकात की। इस दौरान उन्होंने भारत के तेज समावेशी और हरित विकास के लिए भारत की आकांक्षाओं का समर्थन किया। एडीबी अध्यक्ष ने कहा कि वो भारत की तेजी से बढ़ती अर्थव्यवस्था से प्रभावित है और अगले 5 साल में 20 से 25 अरब डॉलर भारत को देंगे ताकि भारत अपनी आकांक्षाओं को पूरा कर पाए। उन्होंने कहा कि कोविड महामारी समेत तमाम रुकावटों के बावजूद भारत चालू वित्त वर्ष में अपेक्षित 7% वृद्धि के साथ सबसे तेजी से बढ़ती हुई प्रमुख अर्थव्यवस्था बना हुआ है।
Welcome back. You're watching Market Cafe on ET now. We'll quickly move or switch over to domestic news. And due to the rapid technological development, the job market in India is flourishing significantly, says Ankit Agarwala, who's the managing director at Michael Page India. And he was in conversation with Tamanna Inamdar. Listen in to a slice of that conversation, where he also speaks about the global tech layoffs and the impact of that on the Indian job market.
We are still seeing pretty robust activity in the Indian white-collar job market overall. driven by quite a few sectors who are doing very well and also hiring actively. And we expect this trend overall to continue across the year.
All right, so give us the top highlights from your survey. And one thing which struck me is where you say 38% of respondents in India have worked for not more than 2 years in their current role. 86% of respondents plan to look for new career prospects. So this quiet quitting is still very much going on, is it?
Absolutely, and there are a number of reasons why employees are still looking for new opportunities. Primary amongst them is better career growth opportunities, a change of sector. Better pay is always up there as a strong reason. But also we see other reasons emerging, Tamanna, such as company culture, values of the company. And these are things which have been tested a lot in the pandemic in the last 2 to 3 years. And we are seeing people really looking to change basis these factors as well.
Of outlook for salary hikes that you're seeing in this year for those who are continuing in their jobs and also those who are looking to switch over?
Yes, so we see pretty healthy annual increments this year comparable to last year. On an average, they are around the 9 to 9.5% mark for people in their current companies, which is fairly similar to what we saw last year and a big step up from what we saw in the beginning of 2021. While changing roles, it of course depends on the seniority of the professionals involved. For senior roles, we are looking at anywhere between a 15 to 25% average hike. And for junior to mid roles, anywhere between 25 to 35. So still pretty good numbers for qualified senior professionals.
In terms of tech sector specifically, the kind of news coming out is not very heartening. Recently, there were reports that Wipro is slashing its starter salaries down to 3.5 lakhs per annum from 5+ annum if those candidates want to get onboarded quicker. And to take starting salaries back to the 3.5 lakh mark seems like a regression. Why do you think this is happening, and will this be a continuing trend?
Absolutely, Tamanna. You have to realize that for the large IT services organizations, most of their markets are global. And with tightening of global demand and reduction in spending overall, these organizations are certainly bearing the brunt of the global outlook right now. And it's not surprising to see reductions in salaries like the ones you've pointed out. Having said that, on the other hand, there are still a lot of large non-technology organizations such as consumer, healthcare, etc., who are looking to build their global technology capabilities. And we still see a strong demand coming from these sectors, which to some extent balances out demand in the highly qualified or highly skilled segments.
Okay, let's move on. And the Green Bond, launched recently by the Indore Municipal Corporation, has been listed on the National Stock Exchange. This is the first such listing in India. Let's go across to Anurag Joshi, who's joining in with us with more details on that. Anurag?
Indore Municipal Corporation has listed the country's first ever public issue of green municipal bonds on NSE. Sources told ET Now the bond sale received about 720 crore rupees of subscriptions for an issue size of 244 crore rupees. Regulators in India are pushing with steps to build a robust municipal bond market to help urban authorities tap the capital market to meet their financing requirements. And this is at a time when urban infrastructure needs more funding to build roads, metros, sewage systems and utilities. The green bond market globally recently crossed the $2 trillion mark, and an emphasis on more green funding, more ESG-driven financing is expected to drive future municipal bond issues. There are several other municipalities that are also looking to tap the bond market, and given the response for the Indore issue, it's possible that a few of them may look to sell bonds to the public.
Well, from bonds to Indian startups, the churn that we are seeing in terms of valuations as well as layoffs. We spoke with Baiju's Divya Gokulnath on the sidelines of the India Digital Summit, New Delhi. She shares the 3 trends that are driving the Make in India concept and sheds light on the company's fundraising plans.
We are about to become the world's 3rd largest economy by the end of this decade. It's so exciting for India. And we can literally make in India for the world. And that should be the theme. Make in India, not just for India, but make in India also for the world. And there are 3 mega trends which are driving this, right? From decarbonization, there is digitalization, right? There is also global offshoring. And if you see 2 out of these 3, education actually comes in and plays a massive role. In education, and I can speak for what we did over the last 18 months, while we have 7.5 million paying students on our platform, we also have 5.5 million or 55 lakh students who are learning with us for free. Now, why is that possible? That's possible because of technology. That's possible because we have great content available, which we can now scale to the deepest parts of the country with the power of technology.
Mr. Ravindran said that, the last 6 months were challenging for not just the ecosystem but for the company as well. But the company is going to make a shift to not just growth but sustainable growth. There's also news that Baiju's is in talks with investors like the TPG Group to raise more funding.
So the last 6 months, and I would say the last 1 year, has been challenging, but it's also shown us that if we could survive the last 6 months, we could survive anything, right? It's not been easy. But in challenges, they also lie opportunity. So I would say that the next 1 year, and actually even the last 6 months, the number of things that we've done, in spite of the challenges around us, external challenges around us, we have launched 300 Baiju's tuition centers, which is capex heavy, effort heavy, and we've done that in such a way that we've done it at scale. And probably what institutions do in 30-40 years, we've done in 1 year. Not that I'm saying that we are fast and furious or that we are slow. I think we should be fast enough yet very steady, right? So there is a balance between being fast and being steady, and that's what we need to maintain, and that's what we'll continue to do in the coming years.
And while speaking of startups, Sanjeev Bikhchandani, the co-founder of Infoed, says that the founders should lead by example and should cut off their own salaries before laying off employees. He adds that currently valuations of every company will be affected as and when the US Federal Reserve tweaks the rates. Let's go across and listen in.
Well, it's a question of are there alternatives to downsizing? Secondly, you must lead by example as a founder and cut your own salary first. Before asking others to tighten their belt. And when you do so, the conversations can be such that you give people a soft landing.
The government is really sort of building up startup ecosystem, and they are saying that it's a startup ecosystem, digital ecosystem that's going to really lead growth.
So what we have been seeing over the last couple of quarters is that there has been a certain softening in IT hiring. Okay, and this is largely led by global trends. What's happening in the US market. But non-IT is doing fine. So if you look at our latest jobs week, it was a 2% YOY growth. But that was minus 15% in IT and plus 25% non-IT. So really non-IT, which is more broad-based actually for the economy, is doing rather well. And that I think augurs well for the economy.
So your take on valuations? They have been criticized to have been bloated valuations, especially with respect to how they were seen after the IPOs of some of these startups that came out.
It's got a lot to do with liquidity. And I think what has happened is that post-2008, for the next 13 or 14 years, the Fed printed its way out of trouble every time there was a problem. And that led to asset price inflation and excess liquidity, which found its way everywhere, including into early stage companies in India. Now, with the Fed contracting its balance sheet and interest rates going up in the US, this will impact valuations all over the world across all asset classes, and that's what is happening.
Well, good insights from the man himself. Always valuable to hear him. But with that, we'll slip into a short break. More stock specific on the other side. Watching Market Cafe on ET now. Let's quickly have a look at what Asian markets are up to at the start of trade. Today, we're looking at cuts across the board, not unexpected. The Nikkei is down nearly 1.5% as we speak. We're looking at a similar cut on the Kospi as well. The Shanghai, as you can see on your screens, is down 0.2%. The Kospi is down 1.5% as well. We're looking at cuts on the Hang Seng as well as, in fact, 0.8% lower the Hang Seng as we speak. And the ASX 200 lastly is down around 0.33%, least of all of those indices in terms of decline. When I'm looking at the SGX Nifty itself, down around 0.5%, we're looking at a very weak start. Below 17,800 at least at the moment is where we're looking at it, Vinny.
Okay, that's the Asian market check. Muted start, weak start is what we could see coming in for the Indian markets, at least as of now. But speaking to the management of Titan, MD, Mr. C.K. Venkatraman, my colleague Ashwar and I talks about the jewelry segment, the company's plans to launch at least 5 to 7 Zoya stores in the next 2 years as well. Let's go across and listen into his views.
There are plans, but at the same time, unlike even premium categories, luxury is a category which is a destination in nature. We are present today in the best of locations, in the best of cities in the country, and to that extent we also expect people from smaller towns to make a beeline for the Zoya stores, which you already have. But at the same time, I think we will be opening maybe 5 to 7 stores in the next 2 years.
Zoya's earnings were a little over 9,500 crores, if I'm not wrong, and
Titan Company, you mean?
Yes. I mean, sorry. Yeah. Yes. The revenues were a little over 9,500 crores. With this new store launching, to what extent do you see this adding up to the revenues, and what would be the growth rate going forward?
See, Titan Company operates from a philosophy of pearls on a string from a portfolio point of view. Zoya is a small pearl in the beautiful string that Titan Company has. And in the 9,500 context, Zoya has a small role to play. But in terms of making a wow impact on its customers, Zoya's share is much greater than what the number represents. So we are not at all concerned about the share of Zoya in revenue to Titan Company, which is small, which will continue to be small for a while. But Zoya's share in terms of prestige, in terms of world standards, in terms of unmatched, unbeatable overall customer experience to the total Titan Company kitty would be very, very significant.
So far, like we spoke, there are as of now 7 stores of Zoya. At present, what is the same store sales growth for this segment of Titan Company Limited?
I don't offhand recollect, but I think it is of the order of 60 or 70%, if I recollect, for FY23, the same store growth. We are likely to end somewhere between 225 and 250 crores for the Zoya business, Zoya brand, and that has come substantially on the same store growth.
Right, we move on. We have Lisa with us. Good morning, Lisa. And Lisa always takes us through all the stocks that are buzzing or ought to buzz in trade today, if I can term it. So Lisa, talk to us about which stocks ought to buzz today.
Well, good morning to all of you all. Starting with the exporters of textiles will be in focus, like Welspun India and Gokuldas exports on the back of weaker than expected annual forecast from Home Depot as well as Walmart. Moving on to Sapphire Foods, the company has increased its stake in Gamma Island Food Private Limited, and the stake has been increased from 51% to 75%. Note that Gamma Island Food, it operates in Pizza Hut and KFC restaurants in Maldives. Bharat Electronic Limited has signed MOU with ADA and DRDO for Advanced Medium Combat Aircraft Program. Also, Lemon Tree Hotels has signed a franchise agreement for a 34-room property in Manali, and the hotel is expected to be operational from June 2023 onwards. Biocon has also raised NCDs worth rupees 1,070 crores. Mirza International has received NCLT approval for the company restructuring and also the demerger of its branded business, Red Tape. And lastly, ICICI Pru Mutual Fund has increased the stake in LIC Housing Finance from 5% to 7%. So these are the stocks that investors will keep in focus today.
Okay, those are the stocks to watch out for, Lisa. But stay on and tell us what are the brokerages saying this morning as well. Which are the stocks that they have picked out today then?
Yes, surely, Vinny. Starting with Axis Securities, they have upgraded Indigo to buy from add earlier, and the target price is at 2,316 per share. This implies a 25% upside at the target price, and this justifies as the management expects a decent quarter in Q4 FY23 driven by encouraging booking levels. Also, the Singapore jet crack spreads has corrected further, and this is a positive for the ATF prices. Secondly, on Jefferies has maintained a buy on Prestige Estate at a target price of 550 per share. At the analyst meet, the management has aimed to double the overall residential sales by FY26 and also to multiply the lease income by 7 times in the next 5 years. It will entail a capex of around $2 billion and the debt could also treble in the interim. And lastly, Macquarie has maintained an outperform on delivery at a target price of 440 per share, and the bull case scenario is around 440 to 730 based on the decadal revenue CAGR of 18 to 23%. So these are the stocks that are in brokerage radar today.
Well, thanks a ton for breaking that down, Lisa. But with that, we're completely out of time on this edition of Market Cafe. From Vinny, myself, and everyone who puts the show together, thanks so much for watching.